Hello and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra. With me is Shail Bhatnagar, and we begin the first edition of Market Today for the new year. That's 2025. Here's wishing all our viewers who've been with us throughout the year 2024 and all of the new ones who are joining in into the new year as well. We hope from the Business Today television team that your year turns out to be a fantastic one, personally, professionally, and also in your investment journey. May 2025 be the most profitable year for you thus far, and we will continue to make all our efforts even better them further to help you get the best of market insights in this new year as well. Good morning, Shell. How was the party last night?
Well, Sakshi, one good thing was that it wasn't as cold as it was expected to be, and obviously it was something fun. I came back after 1 year back home, so 2 a.m. and we ended the party somewhere like 4. So a bit of sleep and a lot of expectations for 2025. My wife was insisting that I wear a particular piece of jewelry to begin 2025 with it, but I thought maybe let's keep it for Friday. But okay. Let's wish everybody a great year ahead, ladies and gentlemen. May the light of wisdom, may Goddess Lakshmi, may Goddess Saraswati be with you. May all the pain that you have in life disappear, and that all that we learn from the markets is put to productive use. We've had 9 straight years of gains, as Sakshi has said so many times in the last 1 week or so. Let's hope 2025 brings good cheer. The last 3 months have been painful for all sorts of investors except for those who play on the short side. And let's hope that this pain disappears fairly soon. We are looking at more at the budget rather than third quarter earnings as far as January is concerned. 1st Feb is when the budget is, the market will be open. It's a Saturday. And there are a lot of expectations, Sakshi, now getting built into the market because third quarter is likely to be tepid. So there's nothing much that the markets can do in terms of expectations of earnings. And they'll be out soon. I think Jan 7th is the first set of earnings that is coming in. But it's the budget that can change sentiment. And more or less, a lot of things are expected from the budget, especially from the capital market side. There is this feeling in the market that, and of course in the economy, that the government has done pretty much next to nothing when it comes to, providing relief to the middle class. All it has done is increase taxes left, right and center, and that has squeezed what is private consumption, and that's one reason why you see markets where they are. So let's hope that lots of good things come into the budget, and therefore I am very, very hopeful that all budget focused stocks such as those belonging to the fertilizer space, RCF, NFL, FACT, GSFC, GNFC and many other agrochemical plays will be in action between now and 1st of Feb. You will see hectic activity on the railway side. It's already begun yesterday. Look at the way how RITES and RVNL moved. There is a lot of activity which is likely to see in the PSU banking space. Defense is likely to be big. So these are the themes that are running, and of course a weaker rupee which is going to provide a lot of comfort to IT stocks, a lot of tailwind to pharma stocks. So these are two spaces that I remain very bullish on. The entire budget theme and the fact that Sakshi, we need to just tailor down our expectations for 2025. 9 straight years of gains, and the last quarter is signaling probably what is ahead. So let's be a little careful, let's invest in quality, and of course let's hope for the best. Now tell us what happened on Wall Street on yesterday.
Well, Thin trade across the globe is what we see. Of course, in that shortened trading session, we did see that in the US markets, third straight days of losses is what we've seen. S&P 500 closing about 0.4% lower in trade. The Nasdaq also dipped by about 0.9%. You also saw Dow Jones slipping about 0.07% in trade as well. For the year, the S&P 500 is surged by 23%. We have seen it build on to the gains of 24% of 2023. Meanwhile, Dow has added 12.8% in 2024, and the Nasdaq has outperformed the Wall Street with a gain of 28.6%. And Wall Street has definitely outperformed the Nifty, which garnered 8.75% returns in all for 2024 as well. Now, what we'll also keep an eye out on how the globe is, the very thin trade. So you know that markets across Australia, Japan, South Korea, Hong Kong, UK, Europe, and they're all shut today on account of New Year's holiday. So we don't have, we have muted volumes across the globe. So we can actually expect a very range-bound or thin volume trade in the session today. What we'll also keep an eye out on is how the foreign portfolio investors looked at the Indian markets yesterday. Again, on Tuesday, they offloaded stocks worth about 4,645 odd crore rupees. This is for the 11th straight session that FPIs have been net sellers. For the year so far, over 1.2 lakh crore rupees has been sold off from the FIIs basket. Yesterday, we've seen the DIIs, however, again stepping up. They bought stocks worth about 4,546 odd crore rupees yesterday as well. Now, the GIFT Nifty again is indicating to a muted start in today's trading session, looking at the muted volume that we have. Of course, the key triggers, most of them, as Shell you marked out, will be important to track. The bigger challenge for the Nifty for this month again will be as the seasonality factor comes in. Like I've marked before as well, the month of January for the last 6 years has actually resulted in negative returns for the Nifty, with losses ranging between 0.3% to even as high as 2.5% as well. Now, this month will also begin with the auto sales figures for the month of December. So today we are looking at cues for those. Auto space stocks will be in focus because of that. We will have the macro data in the form of PMI, of course. And of course, coming up will be the quarterly business updates from banks and other companies, that have started to pour in as well. And the Fed is also slated to meet towards the latter half of the month. That will be the first big trigger for the markets ahead of the union budget. And of course, Donald Trump's assuming office will also be important for us to track in the month of January. Now, for today, the stocks that we can keep an eye out on, ITC, remember the company's entire shares held by the company in its hotel units and JV will be transferred to ITC Hotels effective from January 1st. So keep an eye out on this one. We'll continue to share with you all those details as to whether if you're a shareholder, what are the kind of shares that you will get. All of those stories are already out from our channel, but we'll continue to repeat them so that you don't miss out on all of those. Kalpatru Power projects will be important to watch. The company and its international subsidiaries have received orders worth the 1,000 odd crore rupees. In 2024, the inflows have exceeded 17,300 crores for the company. Pratap Snacks will be in focus. The Competition Commission of India has approved the proposed acquisition of 72.8% stake in Pratap Snacks by Autumn Investment and Mahi Madhusudan Kela. So we will look at that, how that shapes up too. Then Sun Pharma will be important to track. The company will sell the unit Sun Pharma Japan Technical Operations to Japan-based Zaza Industrial Holdings. SJVN will be in focus. The company has signed an MOU with Bihar for development of 1,000 megawatt of pumped storage project and PSPs in the state. Jupiter Wagons from the railway space will be in focus. The company has increased its stake in the arm Jupiter Electric Mobility to 75% from 60% earlier. Dhani Services, the board has approved the raising of funds up to 406 odd crore rupees through the issue of convertible warrants. So that will be important to watch too. Apart from this, we will also look at Thomas Cook. The company is informed of a cyber attack on the company's IT infra. It's working with the cybersecurity experts to support investigation and identify the extent of the issue. And we'll also look at Dynacon Systems. The company has received a turnkey data center IT infra augmentation project of Canara Bank worth 280 crores. So those are some of the stocks that we will be definitely looking at in trade today, Shell.
Well, this is just the right time to welcome a very dear friend, Mr. Amit Khurana, Head of Equities at Doth Capital, one of the most aggressive brokerages that I have had the pleasure of knowing over the last 30 years. A very good morning to you, Amit, and what a pleasure to start 2025 with perhaps one of the most aggressive thoughts that are there in the market. How do you see sentiment at the Lal Street, and Happy New Year?
Happy New Year. Glad to be here, starting my new year, first interaction with your team. Thank you for inviting me. Always a pleasure. CY25, I think, has a lot of imponderables, a lot of factors at play which make us a little hesitant to take a very specific call. And to put it in context, you have so many significant changes happening at the global level, which are geopolitical, having economic implications. And even at the domestic side, we see a few factors which will eventually evolve into a certain shape over the next few weeks, some over the next quarter or so. And therefore, the big picture to draw out is that we've got to be very realistic in our return expectations. I think risk management for the first half will be very important. And the preferred way to allocate money to the portfolio of the stocks is more bottoms up rather than the macro themes. So we have been of the view that stock-specific exposures will be probably better to look at. And then as things evolve, hopefully over the next few months, one will be able to take a view on the macros. So that's the way we are starting the year, and let's see how it evolves.
Morning to you, Mr. Kanana. Yes, wishing you a fabulous New Year 2025. May it turn out to be a great one for you, for your family members, as well as your team members at large as well. You did say that, one should have realistic expectations when it comes to returns from the markets in 2025. Could you, quantify it for us? Maybe, what kind of returns could we expect? Will it be high single digits? Probably similar to what we have seen in 2024, 9%, or could it be in double digits as well?
Well, I would say that the potential for double-digit return definitely exists in CY25, but it will all be driven by two key factors. One, the trajectory for inflation, which was seemingly under control, but it seems to be now again making its uptrend slightly concerning. That's one. And second, I think the earnings expectations. There has been perceptible slowdown in lot many sectors within the Indian economy. We've seen capex slowing down, and government capex has been a big area of concern. Private capex, while we are seeing early signs of recovery, but it still needs to sustain for us to drive earnings for 26. Rural consumption, while it is showing much better signs, but urban consumption has taken a knock. So while there are factors which can definitely make a very valid case for a double-digit return, let us also not forget that some of the stocks and a large number of sectors which have done well are now also quoting at significant premium to the long period averages. Some of these stocks are quoting at valuations which are very difficult to justify even in the most bullish scenario. And that was the point I was making, that having a reality check on what to expect in terms of returns will, I think, be the theme for the first half at least of CY25. And then as these things evolve, one will be in a better position to take a big picture view and accordingly realign the portfolios. Now, I just want to make another point. CY24 was the 9th consecutive year of positive returns on Nifty. And if you look at the overall convergence of returns in India, India was a very volatile emerging market. It has become a very mature market. So while you are having returns which are still positive, but the last 9 years of trends has led to convergence of returns to long period averages. So that's another important aspect to keep in mind. You will possibly, have very rare 20-30% years on Nifty, and more like, double-digit returns, or at best a high, teens kind of return on Nifty, because the valuations are reasonably well, captured in most of the stocks in the sectors.
Right. We are starting 2025 on a very somber note. Almost all market participants that we speak to, including Amit, are advising a very cautious approach, given the fact that you've had consecutive gains for nearly a decade, and there are sure signs that the economy has slowed down. Amit, in your experience, does the budget have this in it to change sentiment that is now prevalent in market participants? If yes, what are the 2 or 3 things that you're looking forward to on February 1st?
Well, the budget, in terms of the relevance, I think it has reduced materially over the years. But every year we still track the key proposals that come out in the budget because they do have a bearing to whatever extent they do. I think there are few factors to look out. One, there has been a talk of government capex coming back into play. On the other hand, the government has a commitment to bring the fiscal deficit towards 4.5% as per the FRBM Act. How will they balance this entire activity wherein they need to spur capex as well as balance the fiscal deficit numbers? So that's one very specific thing one will look out for very closely. And any significant impact of that, how they manage it, will have a bearing on the sentiment. That's one. Second, last year we saw a tweak to the long-term capital gains as well as the short-term. The feeling at that time was that this is not the final move. There will be another one, and there is an apprehension that the short-term might again be raised. Any move in that direction will have an impact on the sentiment again. And then, of course, you have measures which are more towards boosting consumption. I think if you look at the tax rates, even adjusted for inflation, actually they have not. There has not been much of a tax rebate given to the middle income earners. Rather, in some of the cases, the tax rates effectively adjusted for inflation might have actually gone higher. So some moves to boost consumption on that is a hope. How far it will be met, we have to wait and see. So these are some of the measures we are closely watching. I'm not expecting a very significant deviation from the long-term path on fiscal consolidation, not a very significant deviation on any of the other policy parameters. But these few things will eventually impact the sentiment, and that is what we are watching for.
Mr. Kanana, another trigger that the markets will be watching out for is Mr. Donald Trump's assuming office as early as 20th of January. What is your own expectation in Donald Trump 2.0? How is the kind of decision-making, policy changes are likely to impact India and the world? Do you think India will be vulnerable and so will be the markets too, and will be volatile in case there are many changes that occur on various aspects?
Well, yes, I mean, any move on tariffs, which has been a pronounced policy by Mr. Trump, is going to have an impact. And, whether it is lower or higher for India, products will definitely make it vulnerable for some of the sectors. There's no doubt about it. But more than the specific tariffs, it does impact the sentiment. It does impact the earnings, visibility, and it leads to a certain level of, valuations getting realigned to a lower level. So that is one factor. I think the second factor is also that does it lead to the start of a much more aggressive stance by the other economies? For example, if there is a tariff put on Chinese exports to the US, how does the other countries react? How will China react? There's so many other factors which will play out. And by the way, putting tariffs is one measure, but it also has a ripple effect in terms of inflation, moving up. So there are so many, complexities to the entire equation that is very difficult to put it out as one particular outcome. There could be a number of outcomes, and that is exactly where my caution plays out. The first half of CY25 will essentially, one will want to wait and watch as to how these things are evolving. Could it be a scenario of putting in the tariffs and then coming to the negotiating table? So that's the typical fallacy of shoot first and then talk later. Or could it be an understanding that let's talk and figure it out how we can, reach an understanding? The other, I think, risk that we see is that the multilateral institutions could be at risk. WTO and all those other institutions, the relevance of those could be at, under a question. And bilateral treaties could take over. Now, India will have to play its card right. I'm not a trade policy expert, but I think in general, these aspects will play a much bigger role as to how the sentiment works out, and all of that will percolate down to the equity valuations and earnings visibility for the corporate sector.
Right. Let's come to brass tacks, Mr. Khurana, and find out what your research team has cooked up for 2025. Tell us what is the allocation that you've suggested to your top ultra HNI clients in terms of large caps, mid caps, and small caps. What is your favorite pick, and one sector that you are staying away from?
So from the Insti desk, I can say that we are essentially overweight rural consumption. We are overweight durables. We are overweight discretionary. We like a few names even within the FMCG space, but that's very, very specific. We are overweight in that sense on pharma because we believe it's still a safer bet to make, and the earnings visibility for 26 looks much better. IT services, while we have our concerns on valuations in mid-cap IT, I think large-cap IT selectively looks interesting to play. Again, it's a very stock-specific call that we're doing here. Rather than IT, we are actually more bullish about digital themes, internet themes. So we like Paytm because the tailwinds are going to operate now, and a potential profitability in FY27 will help sustain the valuations and drive the sentiment towards the positive side. What were we staying away? Essentially, at this stage, it's probably metals is one thing that we are just keeping a close watch. I would say we are more neutral in most of the sectors rather than being outright negative. I think our negative play is more stock specific rather than sector specific. Banks look interesting on a valuation perspective. So we like private sector banks in particular. PSU banks are not as much, so to say. So that could be one to avoid as per our view at this stage. OMC's tactical trade, yes, but CGTs, given the regulatory overhang, essentially we've stayed away from that part as well. Consumption, I think, especially rural-led, will be the one which we will look out for. And there we stay relatively much more positive versus some of the other sectors.
Okay, got that. Mr. Kanana, another thing that I wanted to understand is from the earnings point of view as well. That will be also another trigger. What are you penciling in for the quarterly results this time in terms of outperformance and underperformance?
Well, we don't have the numbers right now, but I think directionally speaking, I think pharma should do relatively better. As I highlighted, some of the plays in pharma look much better placed because domestic market has done reasonably fine. While pricing pressure was there in some of the franchises for the US products, still I think it should do relatively okay. Other sectors, I think it's a mixed picture. It's very, very stock specific. For example, we feel within the QSR space, while other franchises will not have such a great performance, but Jubilant should do relatively better. Within footwear, we believe Bata may have turned around, but not as aggressive as we initially thought. Titan should do relatively better again. When I look at hotels should have a pretty strong quarter. Alcobev, our channel checks are indicating a reasonably good performance. So the volume uptick should be reasonably good. Cement on the negative side, I think the pricing action has not held on any well, and even the volume uptick has been pretty muted. So cement could be one of the underperformers that could see earnings even getting further cut as the earnings are, the Q3 is out. IT, I think our conversations are suggesting a pretty muted wait and watch mode. In any case, Q3 is a muted quarter for IT services. So therefore, I would probably not be too worried about it. I think the bigger part is the commentary that they come out with in the Q3 earnings, if there is any clarity on how the next 12 to 18 months are looking out. Lead signals are indicating to us some optimism coming in. Campus hirings are better. Some of the books have started showing, order books have started showing better traction. But I think it's too thin for us to make a macro call on the sector. So overall, I think I'm slightly more balanced in my view on Q3 earnings. Because there is a concern that they will not be up to the mark. But that expectation itself has been so marked lower. I think the disappointment risk does not seem to be as high versus a situation when we would have gone into the earnings season with a much higher expectation and eventually seen a disappointment. I see lower rooms for disappointment. But the bigger issue is how does the visibility for the next 2 quarters plays out in the corporate commentary, a whole lot of other vectors that we will go through, which we discussed in our earlier conversation.
Amit, what's the house view on internet stocks? A very sharp rally in Zomato and Swiggy's listing was fabulous. There is traction coming back into Paytm. The second, third rung in this space, car trade, to some extent, Nazara Technologies. Largely those IPOs that have corrected sharply have also reversed smartly. What is the view that you hold for this space? Is there value to be had, and what would be the top pick?
Well, we had Paytm. We still have Paytm in our top picks. We call it the preferred picks universe. So Paytm continues to favor in that. Nazara is as well there. On some of the other names that you mentioned, it's again stock specific because they cannot be taken as one sector. I think these are individual sector plays. Our basic thing is that if the visibility of profitability is good, obviously one we need to take a longer term view on these franchises because these are not short term businesses, and the pace of activity that they are witnessing on their core businesses in some cases makes us believe that the valuations can sustain. So Paytm is one of those names, and Nazara as well. Zomato, our view has been slightly on the contrarian side, and our concern on the Blinkit execution was that it will not play out that well, but it has played beautifully, and all credit to the management to have executed such a beautiful, the entire quick commerce space. I think they have been the ones who have really set it up. So entire credit to them. PB Fintech was one name that we liked at a certain price, but of late, that is again off our radar in the sense that these valuations were not comfortable, and our concern remains on the new investments that they are doing on the hospital business. So it's very stock specific, very selective. So at this stage, we like Nazara and Paytm. These are the two names from the internet or the digital themes, so to say.
Okay, ladies and gentlemen, let's pay attention to the pre-open trade. It's been an exciting 30-35 minutes with Amit. What a wonderful thought process to start 2025 with, and it's also in the green. 30 points higher on the Nifty. Let's hope this light shade of green improves further, not only today, but for the rest of January as well. Let's look at positives. ITC, 1.3% higher, 490. Remember, it's the demerger of the hotel division, which everybody is looking forward to as far as this count is concerned. Infosys, 0.5% higher, 1889. In the green, L&T, 3623, 13 rupees higher. In the green, Bajaj Finance, 5 rupees higher, 6828. You have SBI, Tata Motors, as well as Bajaj Finance in the green. What is pulling the Nifty down? It's HDFC Bank, 6.5 rupees higher. I think lower. I think technology is something that we should look forward to in the green for the first day. Yesterday they were battered black and blue, but a strong 29 rupee uptick on TCS, 41.24. Let's shift focus immediately to the top gainers in Nifty 500. Well, it's a very positive start on HDFC AMC, 5.6% higher. You have PSU stocks now running amok. SGVN 5% higher, 109.80. I see Oil India 2.6% higher. There is the railway space being represented by Titagarh, 2.5% higher, 11.33. A strong move coming into hospital stocks. Rainbow Children's Medicare 1.9% higher. KIMS, this is Krishna Institute of Medical Sciences, at 608, clocking a 1.7% uptick. Fairly okay kind of a show. Let's look at the NSE FNO space and mark out winners. It's Angel 1, 2% higher. GMR Airport 1.5% higher. Arun mentioned, Mr. Khurana mentioned Bata India 1% higher, and of course Coforge in the green. So that's how it's opened on Wednesday, the first day of 2025. And let's again get our conversation back to Mr. Khurana. The infrastructure space threw up a lot of winners in 2024. How do you look at it in this year, Amit? Any outperformers that you have in mind?
Well, yeah, a very valid point. I think infra, the big issue is the visibility that needs to sort of come back. I mean, we saw very aggressive auto book awards starting way back in 23, which helped the visibility build up for 24 and 25. But then as the election year panned out, we have seen the order inflow slowing down considerably. Now, while there is a segment of social infra and the private infra which is still doing well because the real estate cycle is doing well, but the roads projects have taken a knock. I think a visibility on that will help us to get back this sector into visibility, into sort of a popularity mode again. So at this stage, I would probably wait and watch. The visibility for 26 is there, but I think the sector needs to get further visibility into place. Order books need to move up. And once that happens, then I think the interest levels will start coming back again. Having said that, a lot of these companies are discounting a fair amount of optimism. Let's not rule that out. And so therefore, the market needs to take a very calculated call on that.
Okay, got that. We're getting some numbers for Bajaj Auto in the auto sales. The total sales have slipped by 1% on a month-on-month basis. For December, it's come in at 3.23 lakh units. The expectation was to the tune of 3.5 lakh units, so something lower. And even it's the domestic sales that have actually slipped pretty much. About 13 odd percent of a decline has actually come in for the domestic sales, but exports have increased by 18% to 1.6 lakh units on a month-on-month basis. This is an increase of 18% right there. Amit sir, let me understand from you, how are you really looking at the entire two-wheeler space within the auto basket? We've seen volatile action. They were largely muted times, just some bit of cheer that spread across the two wheelers. And again, it's back to muted demand post the festive season yet again. How are you really looking at it? And do you think with the incoming of Ola Electric, the EV two wheeler space will be up for some more challenge?
Well, obviously, entry of a new incumbent with that kind of a size and scale and ability to spend money, obviously it does have its own reverberations in the sector, which we have seen. But having said that, let us not forget that Bajaj Auto has got its act together even in the EV space. So their portfolio is far more competitive now to some of the other new entrants. And if you look at their overall percentage share from the EV space is now far higher. Now, that's a big picture view, but specifically, I'm not surprised by the numbers being slightly muted because ultimately you see that impact because November was a Diwali month, and the impact of that in December is not a big surprise. Our take on two-wheelers versus some of the other subsectors within auto is that two-wheelers should be relatively better because the rural spending should come back, and we did see the entry levels two-wheelers starting to do well over the last few months. They have now normalized. So within the auto space, I would probably put the overweight on two-wheelers versus some of the other sectors. And these numbers, I think short-term numbers were probably built in, and therefore we had seen a bit of valuations adjustments already to the stocks.
And what about cement, Amit? This has been a space that's been vibrant for the past about 2 months or so. Lots of takeovers happening. What would be the top call on cement, and how do you play that?
So we've been on the negative side on cement for the last almost, I think, close to 10 months now. I think the big picture is that pricing pressure is just too high. And you would expect the volume to compensate for that. But CY24 good part, volume took a knock because first we had the election season, which took it away. And then we had the monsoon, which got extended. After that, one would have expected the volumes to pick up, but we are not finding that evidence. In fact, in the latest channel checks, we're finding a very muted level of volume throughput happening, and that's a concern. Therefore, I said cement is one of the sectors which will probably see earnings cut for 25 for sure, but the risk of earnings cut for 26 is also very, very valid. But having said that, a lot of these stocks have underperformed. They have corrected very meaningfully, in some cases, even 30-40%. So one will have to take very stock specific view about it. So at this stage, we are more, shall I say, on the negative side to neutral side of the trade. But if I look at the key vectors which should work out favorably if price hikes go through, which is expected this month, and volume throughput starts happening, then this could also be one of the interesting sectors to look out for. At this stage, we are on wait and watch.
Okay. Another space that Amsa, I wanted to discuss. Meanwhile, in the pre-open trade, we are seeing a settling price at 23,637 viewers as far as the Nifty is concerned. We'll come back to it once the markets open. But the IPO space, it's been record fundraising yet again. This time around, we saw some of the largest IPOs in the history of Indian stock markets right there. Most of them have actually managed to give strong listing gains, and many of them still trade above their listing price even after getting listed months ago. What is your expectation in the IPO space? Do you think this is a space that retail investors should continue to keep focus? Because the disappointing on non-allocation of the allotment is something that is increasing by the day as the IPO rush continues to be there on the street. But retail investors always, feel disappointed for not getting the allotment right there. And the listing gains for many of them has surged like 40%, 90% on day one itself for many of them as well. So they see this as a missed opportunity. What is it that is your own approach and understanding of the IPO space and how it will progress in 2025, sir?
But I think visibility for 25 looks pretty good, given by the filings that we've seen, by the intent to list. A lot of new names will come in. Some large cap names will come in. You possibly have Reliance Jio coming out for a listing. So there'll be a lot to play out for. From an investor perspective, I think there are two things you've got to keep in watch. One, let us not led by this entire frenzy of listing gains being the only driver of one making an allocation to any new company, new IPO. I think you have to really look at, obviously there is quick gains to be made, so everybody feels good about it. But I think the bigger picture is that it's a clear sign that there is money which is willing to be allocated to equities as an asset class in India. We've seen a significant percentage increase in the overall pie. Second, it's very important to look at the quality of the IPO. In this entire frenzy, we've seen many issues which perceptibly would not have traded in the same valuations had we not got this kind of a liquidity support. Without getting into specific names, I think one is going to take a very calculated, very, very conscious call and look out for names which are good, get them into your portfolio. India is in a good super cycle for the next few years on equities as an asset class, as an economy, the fruits of which will play out on equities returns, which is evident in the last 9 years we've made positive returns. So there are very many years ahead. You will have few bad months here or there, one bad IPO here or there, but look out for the quality and be prepared for the long haul. Listing gains short term, I'm not very, very enthused. As you rightly said, it's like a lottery. If it clicks, it clicks. It doesn't click, you feel disappointed. So I would probably play slightly for the longer haul rather than just the IPO listing gains.
Okay. Amit, let's look at the macro picture of the market as well. Dwindling forex, weakening rupee, rising inflation, and of course the absence of interest rate cuts. Till about maybe 12 months ago, India's macro was something that we brandished very proudly to the rest of the world, which was in a lot of pain. And in the last 9 months, we've seen this very, very sharp cut in the quality of Indian macro. How do you see this impacting markets, and where do you think that the rupee will stabilize?
Well, we don't have an official forecast for the rupee, but I think if you look at versus some of the other emerging markets, rupee hasn't done that bad. We did have some bit of a depreciation, which I think was managed pretty well. The very fact that the Indian macros were strong last year starting actually helped us to manage this entire volatility of foreign portfolio outflows. If that was not the case, probably rupee would have depreciated much faster. And I think inflation is probably the bigger concern to my mind. If that stabilizes, then the other factors are much easier to manage. And FPI flows, they take sometimes a very tactical call. Having said that, while we all track FPI's outflows, very closely, and we get sentimentally attached to this entire narrative, they have not even sold 10% of their entire holdings in India. So they are still invested very, very significantly in India. And very many times these calls are made on a tactical basis because the US dollar rally was in the offing, and therefore that would have been a very significant trigger for them to pull out money. And let us not forget, India was trading at significant premium to long period averages on MSCI Emerging Market Index, or within its own history of trading indices, India was at a significant premium. So I'm not surprised some money going out of the being booked as profits. You're seeing private equity guys also booking profits. So these are cycles which will play out. Uh, to me, the domestic policy framework, if it stabilizes, government capex comes back, and private capex can revive. We can take care of the consumption as well as inflation. All these factors will play a much bigger role in the sentiment, and that itself can bring back this money over a period of time. So while there has been a short-term volatility in the Indian markets because of this outflows, I'm not long-term concerned as much about this particular phenomenon.
Okay. Mr. Kanana, could you also tell us, when it comes to asset allocation that Shell was asking you initially, are you going big on the other asset classes also beyond equities for 2025? What is it that your approach will be?
Well, we only do equities, so equities is our bread and butter. So I would probably put my money into equities only. But yeah, within equities, I think you've got to take slightly more tactical calls at this stage to start with. So probably take very sector specific, very stock specific calls, and probably play for safety first in the first quarter, maybe in the first half of the year, rather than any narrative stories which have been ruling since CY24. So play the real earnings, play the real cash flows.
Okay, ladies and gentlemen, the markets are upon us. We are also welcoming Mitesh Panchal into the conversation and thanking Amit. Let's hope for a great start for 2025. Let me just mark some stocks and then we'll have a conversation with Mitesh. Okay, a green tick on the Nifty, flat. Nifty Bank flat, 20 points higher. The IT index 47 points higher. Let's look at the big voice first. HDFC Bank, 4 rupees 70 higher, 5 rupees 15 higher now, 1775. How about Reliance, flat, 1214.75. Infosys, 2 rupees higher, 1882. It's a very, very modest and quiet start. Bajaj Finserv, 6 rupees higher, 1574. ITC almost 55 paise higher, 484.50. L&T 2 rupees higher, 36.12. The front line is very, very quiet. The Nifty just quiet as quiet can be. Let's just dip deeper into the NSE 500. Okay, ladies and gentlemen, keep an eye out on PSU stocks. Rights from the railway pack, 1.6% higher, 296.40. You have SGVN, 2 rupees 2.7% higher, 107.23. New Gen in top form. This is a record high again, 2.7% higher, 1748. E-Clerks, 4% higher, 3623. What are the most active counters where you see some action? ITI, 2.4% higher, ITC in the green. Nothing much to talk about. Let's get Mitesh into the conversation. Mitesh, a very warm welcome. Happy New Year. We have been missing you on Business Today, and let's hope that 2025 brings good cheer, good luck, and a lot of happiness to all traders, investors, and everyone alike. With that background, ladies and gentlemen, Mitesh, what would be your first step into the markets now?
Good morning, Shelji. Good morning, Shakshi, and good morning to all our viewers, and wishing all of you a profitable year 2025. So, Shelji, let's start with the indices. First of all, it's on the quarterly charts. It's a very rare that a pattern gets replicated. So let me start with this. For the quarter ended 30th of June 2022. So if I compare two quarters, that is the quarter ending 31st of March 2022 and the quarter ended 30th of June 2022, post 2020 pandemic, the first bigger crack has came in these kind of quarters. So the earlier quarter, 31st of March 2022 comparison with 30th of June 2022, the indices has contradicted by 9.64%. So there was a correction of 9.64%. I'm talking about a Nifty correction. Post that, there's a marathon run, and from the low of 15,183, indices have hit a high of 26,277. Same thing has replicated for the quarter ended 30th of September 2024 comparison with the quarter ended 31st of December 2024. Index has contracted by 8.39%. So what has happened earlier? From 31st of March 2022 to 30th of June 2022. So after that, indices for one quarter just remain muted for 2 quarters, and then the marathon rally started. So what does this indicate? We are of the view that going forward in the next 1 quarter, indices will consolidate, and then we see a very strong up move in the year 2025. So by the next year, by the end of next year, 1st of January 2026, we are of the view that Halide Index will give at least 10 to 12% upside in this year. So this year is the year where perhaps we have to start opening up the checkbooks. With that view in background, there are 3 stocks which we are liking as of now based on the quarterly chart. So these breakouts are occurred on the quarterly chart. First is Lux Industries at 2012. We are of the view that above 1980 the breakout has taken place. So Lux Industries is a buy as of now for the potential target of 2400 2500 with a stop of 1900. Second is Car Trade at 1487. We are of the view that Car Trade is also in the queue to witness a very strong up move in the year 2025. So at 1487, one can go long with a stop of 1300 for the potential target of 1600 and 1800. And last is Thyrocare. We are of the view that Thyrocare above 880 has given a very strong up move and a breakout. So Thyrocare as of now is a buy at 914 as based on yesterday's close. With a stop of 850, one can go long at 914 for the potential target of 1100 and 1250.
All right. Well, very good morning and Happy New Year to you also, Midesh. May it turn out to be a fantastic one for you and your loved ones as well. And may you achieve everything that you have set out for yourself in this new year. Let us also welcome another guest who's joining in on the show. We have Mr. Arpit Periwal. He's the analyst for derivatives and wealth management at Motilal Oswal Financial Services. Warm welcome, Arpit. Great to have you with us on day one of 2025. Happy New Year to you as well. And I hope the same for you, that this year turns out to be a great one. Tell us, what is your New Year resolution?
Very good morning to everyone and wishing you all a very happy new year. So a new resolution is that as Indian equity market, we have been following equity markets for many years and the story still remains intact. So last year it has been quite volatile, especially the last 3 months. But the new year resolution would be like the right set of advice and the right set of investment going forward for this year. So as we see overall last year, we have seen a lot of choppy ride, especially in indices in last 3 months. However, Nifty, if we see the trajectory from last 9 years, it has been forming higher highs and it has seen positive returns from last 9 years. So overall, the equity curve trend is still intact. And going forward also, we're expecting coming year, the index is likely to consolidate in a broader range. However, sector-specific action is likely to be seen. And we are heading up ahead of its budget. So before a budget, definitely there would be a lot of sectors that would be in focus. So I think all in all, 2025 would be a more of picking of a sector specific rather than an index specific approach.
All right. Mitesh, let's focus on some of the sectors that have been doing very well. Your take on pharma, in particular Lupin, in particular IPCA, and any other top stock that you would like to highlight within the drug space?
Yeah, Shelji, not only just pharma. So let's talk about pharma first. So we are of the view that in such a scenario, all the stocks which are trading at a lifetime high, they continue to surprise going forward. So I don't see that the rally in pharma will wash out so easily. So going forward, we are of the view that both Lupins and Pharma, IPCA Lab are going to hit a new high. And the most interesting fact in the analysis of 2024, the yearly and the quarterly, comes up with the fact that the recently listed companies, I mean, those stocks which have listed before 2 years or so, are now just picking up the space. So we're talking about car trade, we're talking about just a kind of PTM, we're talking about just a first cry. So all those IPOs which have listed just before 2 year or 1 year are now picking up the space. So for interestingly in 2025, the theme which we are playing is those IPO which are listed in the year 23, 24. That is where the maximum comfort from the chart is coming up based on the quarterly and the yearly chart. But as far as the pharma is concerned, the rally is here to stay. Both Ipca Lab and Lupin continue to surprise going forward.
Okay, Arpit, coming to you as well. Key stocks for 2025. What have you come out with as far as research is concerned? Where can investors continue to make massive money in this year if one still wants to put fresh money at this very, very volatile juncture as well as consolidative market phase that we are looking at? What are the stock selection, top picks that you would come out with?
So looking at the overall, the last year, if you've seen, we have seen a good sector rotation. And going forward, our top three sectors would be first from the pharma space. And within the pharma space, if we see very strong outperformance, we have seen it has seen a decent returns in 2024. However, going forward also within that, Lupin would be a top pick. So technically, if we see, we have seen a strong range breakout on the weekly scale in the Lupin. On the monthly and weekly chart, the chart setup is very strong. And definitely this year also, we're expecting a good outperformance of 10 to 15% rally from here on also towards 2450, 2600 levels. So within the pharma pack, Lupin would be a top pick. Second would be from the depository space, that is the capital space, CDSL. So if you see the overall chart setup of CDSL, we have seen a very good rally from 1400 to 2000 levels last month, and post that we have seen a corrective move from 2000 levels. So looking at the monthly and weekly setup wise, it's in a strong uptrend, and any dip towards 1720, 1730 would be a good level for a new entry point for this year's perspective. So CDSL would be a second pick, and third would be from the hotel space. So if you see overall, the hotel stocks have seen a tremendous move, and still on the charts they are looking very strong. Within that, Indian hotel would be a top pick. So Indian hotel, if you see the chart setup wise, the monthly scale is strong, intact. Weekly, the base of the stock is shifting higher, and on the daily also, it is comfortably holding above 830, 840 levels. So positionally from 3 to 6 months perspective also, definitely we can see Indian hotels touching new 4-digit figure. So this would be our top picks for the year going forward.
Okay, ladies and gentlemen, let's take a detour into the markets. It's a fairly okay kind of a start. You might feel that the Nifty is in the red, therefore the market is on the back foot. Nothing could be different from this. 1520 advances, 1520, 670 stocks in the red. So it's an easy 5:2 kind of a advance decline ratio. Even Stevens, we track 19 indices for you. 9 are in the green, 10 are in the red. The Alpha 50 and the small cap index are in top shape. IT is doing well. There is a fairly decent amount of profit booking happening on auto stocks. 0.3% lower on the Nifty auto index. Metals is on the back foot. Banks are on the back foot. This is how it is. In terms of sheer volume bust in the first 10 or 2 minutes of trade, look at KPIL. This is Kalpataru Power, 1.1% higher, 1312, almost 120% of 5-day average is traded. Look at SGVN, very strong breakout. Look at how RITES is moving from the railway space. NLC India, New Gen Software, these are initial bursts of volume that are coming in. And of course, you have KPIT Tech. Let's get Mitesh into the conversation. Mitesh bhai, KPIT Technologies has been one of those outperformers that saw a fairly strong bout of profit booking over the last 6 months or so. Is this something that you're looking forward to as far as long-term charts are concerned?
Yes, exactly. And the reason is that if you look at the weekly chart, Shelji, for the week ended 20th of December 2024, the low was 1408, and in the current week, that is the ongoing week, the low has been defended very well. We are of the view that even the higher high formation will continue going forward, The next resistance is at 1555, which it has created on 28th of December 2024. So yes, as of now, one should go long. The answer is yes. What should be the stop loss? So the stop loss should be the nearest low, that is 1408, which it had formed on 20th of December 2024. So with a stop of 1408, one can go long at the current level for the potential target of 1555.
Okay, Arpit, let me come to you. A lot of this buzz is happening in the renewable energy space. IRIDA is up 4%, SJVN up 2.5%, Suzlon is also buzzing in trade. Solar Industries is up by 1% as well. What are you keeping an eye out on when it comes to this renewable energy?
So if we see overall, as you've seen, right momentum in the solar energy space itself. So if we see overall chart setup of Suzlon, so Suzlon has seen a very good rally from 20 odd levels to 80 odd levels in the last year. However, in the last couple of months, you've seen a corrective move. It has retested its breakout zone around 50-52 levels on the monthly chart, and again we have seen rebounded from lower levels. So I think the stock overall, the base of the stock is shifted higher from 42 levels to 52 53 levels, and positionally we can again head back towards 70 and then 75 plus zones. So looking at the chart specific, Suzlon would be a preferred pick within this space. The base of the stock is shifted higher, major support is seen at 55 levels, upside more momentum above 70 towards 80 plus zones.
That's the theme that is buzzing in the market. Let's look at how volume is shaping up. Okay. ITI, this is the government telecom equipment maker, up 1%, 391, the top traded counter, almost 345 crores traded. MobiKwik, no stopping it, 1.1% higher, 592. Ereda, Sakshi's already marked this, very strong volumes. And Unimec, this is yesterday's listing, still a lot of strength left now, 3.4% higher, 1426. Sakshi, what has also come back is Intellect Design. This was a stock that had hit record high some time back. What else is buzzing in the green? You have Apollo. This is a different Apollo. We'll avoid that. There is Action Construction Equipment. This is 4.2% higher, 1570. Suzlon, 2.3% higher. Sakshi's already marked this renewables theme. What else is buzzing? Okay. We always mark Indotech Transformers, again 5% up. It does not matter. Bull market, bear market, nothing working in the world, but Indotech rises 5% every day. Okay. What else is doing well? 5% uptick on RS software. Idea Forge is doing pretty well. And of course, you have a strong move coming into, these are the stocks that I don't want to mark, but nevertheless, Padamji Paper, 7.2% higher, 192. Quantum Paper, 9% higher, 135. The valuations in the paper space are so minimal and so low that it begs the question why people are not looking at this value. Miteshji, what would be your favorite paper stock?
It's an absolutely low liquid stock, but South Indian Paper Mill is what we are looking at. The stock is quoting at around 120, 115. South Indian Paper Mill, but the volume is so low, as you have pointed out, in the entire paper space. Probably after JK Paper, you won't find such a strong liquidity in any of the counters. So, as a disclaimer, many of our clients are holding that. We are of the view that the stock will outperform in the next few quarters with a target of 180 to 220. So yeah, South Indian Paper Mill is what we are looking at.
Okay. Got that. Let me ask you, Arpit, on the railway story as well. A lot of these stocks are buzzing like RITES, IRCTC, Ircon. They've been on the thick move again, pre-budget positioning happening. Are you penciling in strong moves on some of them?
If we look at all the railway stocks, post the last elections, we have seen a stupendous rally, but post last 3 to 6 months has been dull for overall the railway stocks as a theme. And if you look at the stock specific action also across the railway stock, we have seen a corrective move from high levels. However, if we see the space itself, Railtel comparatively, if we see, has been relatively resilient from higher levels, and it has formed a strong base near around 400 and 400 levels. So I think overall setup wise, still there is some meaningful upside left for the stocks. But however, as of now, there is no major momentum. So I think railway within the railway space, Railtel would be a preferred pick as it is from a strong base near around 360, 370 levels. That would be a major support zone. Slowly, steadily, it can head towards 420, 440 levels. Apart from this, other stocks, the structure is still in pain. So I say overall, looking at the setup wise, it's better to wait. And as soon as we see some momentum picking up, then it would be a good time to add to the stocks.
Let's just step into the market and look at different sectors. Let us see if there's anything happening on the sugar space. Well, tea stocks are doing well. Jayashree Tea, 3% higher, 131.5. Bajaj Hindustan, this is the sugar space, 2.7% higher, almost 31 rupees. Mawana Sugar, Uttam Sugar, Dwarikesh up 2% each. We track about 22, 23 sugar companies, and a vast majority of them are in the green. The Nifty has now slipped 31 points lower at 23,612. What else is buzzing? Do I want to mark any record highs? Let's look at them. Some of them are obvious ones. Lloyd's Metal 0.4% higher. Radico 25.95. Nothing much here. Anything in terms of volume buzzers that I can note? Okay. SGVN 4.5% higher, 108.90. Okay, that's interesting. This is the only one that I'd like to mark at this point of time. Anything that is buzzing? No. That's what it is at the moment. All the wealth management space is undergoing a mild bout of profit booking. You have IEX down 1%. There is ICICI Securities down 1.5%. CAMS Services 1.2% lower. HDFC AMC, JM Financial, MCX slipping a bit. That's how it is. Sakshi, what are you watching?
Well, apart from this, the Nifty Bank is still low by about 0.4% also. Just wanted to understand on the banking space, particularly from Mitesh, how are you really positioning yourself? PSU banks versus private banks, where will strength be seen in 2025? Are there any select banks that are on top of your radar right now?
Actually, repeatedly, unfortunately, the momentum is not picking up with respect to the banks. We have been bullish since last 9 months or so. But unfortunately, in case of Bank of Baroda, in case of PNB, in case of State Bank of India, the volume and the momentum is not picking up. So between the comparison, yes, PSU banks are looking pretty interesting in the picking up order. We like Bank of Baroda, technically speaking, followed by Canara Bank, PNB, and State Bank of India. But unfortunately, as I said, the volume and the momentum is not picking up. But given the choice, I would like to accumulate these four stocks. Would like to hold it for the year, and we are of the view that finally, in this year, PSU banks likely to outperform the private banks.
Okay. Got that. Well, let me also get in Arpit on that front as well. Arpit, we've actually seen a lot of NBFCs do very well, especially in the last few months or so. And, within that space, even the capital markets related stocks, brokerage houses, companies like yours have also done very well on the stock markets. In fact, Motilal Oswal has been among the top performers. That's doubled investors' money also in this year, 2024. So it's been a fab one. Congratulations to all the work that you guys are doing. And we are all riding on this entire financialization of savings theme that's actually buzzing in India. Tell me, within the large NBFC space, where are you keeping an eye out on? Is it again going to be the wealth creating space, the brokerage houses? Is it going to be EMCs? How should one be positioned here?
So if you see, as rightly mentioned, the depositories, the AMCs, and the exchanges has been a good outperformance in the entire 2024. So I think the theme is likely to outperform, and within that, especially the depositories has been a huge outperformer. So if we see over the chart setup of CDSLs, KFIN, and overall setup wise, So within this space, CDSL would be a preferred pick. So if we see the setup wise, CDSL has seen a very good rally from 1400 levels to 2000 in last couple of months. However, due to market weakness in last couple of days, we've seen a corrective move from 2000 to 1720 levels. So if you see on the daily scale, it has retouched its breakout zone. And going forward, coming year also, we are quite bullish on this stock as overall theme is playing out. So CDSL would be a preferred pick within this space. And positionally, we can expect good 15 to 20% upside from here on also towards 2000 plus 2200 levels. So CDSL would be a top pick. With a major support around 1650 levels for an upside move towards 2000 and then 2200 zones positioning.
Sugar Sakshi is something that's clicking. Balrampur Chini, 537.6, 1.4% higher is what I see. In terms of some other gainers, life coming back into Himmat Singha Seede, 2.7% higher, 193.65. What's also looking good is the plywood space. Century Ply and Green Ply, both of them showing more than 2.5% gains. Clicking in the green is also stocks such as KPI Green and of course Sequent Scientific. Please keep these stocks in mind. Let's look at some all-time highs. Okay, Indraprasth Medico. This is something that we generally don't track, but this is a Delhi-based hospital which is partly owned by the Delhi government and the larger majority hold is with Apollo Hospitals. Please keep an eye out on this one in terms of sheer valuation. This is much cheaper than the frontline counters that have been hitting repeatedly highs, which is Apollo Hospitals, KIMS, Rainbow, Yatharth Medical, Medant, Narayan Hridayalaya. This is a catch-up rally that's happening on Indraprasth Medico. Please keep an eye out on this one. Unimec, 7% higher, now 1466.2. Sakshi, what are you watching?
Shell, within the Nifty 500 basket, there are again some interesting names that are actually buzzing. Go Digit Insurance is up by 5.6%. And, we've been looking at this insurance theme for the last few weeks or so too. Miteshri, do you think insurance will be in an interesting spot in 2025? I mean, a lot of regulatory changes are expected to take place. Life insurance companies are expected to also set up their health insurance space and go big on that too. How are you really navigating through this space right now?
As far as the insurance space is concerned, Sakshi, see the slide is coming down and down only, which means that the correction has not yet over. So what we'll have to see is that probably for us technically the entire insurance space, the picture will be clear by the end of the first quarter of the calendar year. So we expect a consolidation in the next 3 months, and then probably the momentum will pick up. So as of now, we'll not aggressively buy this space, but put in the watch list. After the first quarter, looking at the chart pattern, looking at the momentum, probably in the second quarter, we'll take a call.
Okay. Got that.
941. Sakshi.
Yes.
Yes, Sakshi, continue.
Arpit, just wanted to ask you also, is there going to be a sector or a space that you're going to completely avoid in 2025?
If you see overall going forward, last year, especially in the last 3 months, you've seen decent correction in the sectors like auto, PSUs, oil and gas, and media. So if we see the setup wise, overall the setup wise, if we see energy space has been quite underperforming. And going forward also, if we see the overall setup of the Nifty energy chart setup, it is still in downtrend. So I think going forward, it will take couple of months the overall the index to recover. So I think going forward, apart from selective names, overall the chart setup of the entire energy pack is in downtrend. So I think this would be the sector that could be avoided because the monthly and the weekly trend is a strong downtrend. So better to wait for any better opportunities. And this sector is likely to be underperforming in the coming quarter also.
$942, almost the first 28, 29 minutes of trade is done. I wish I could say that's comfort on the Nifty and the Bank Nifty. No, it isn't. Even the NSE 500 has slipped a bit. But there are pockets of outperformance in the sectors that we've been tracking. In particular, you have a strong move coming into many high beta PSU stocks. Look at IREDA, look at RVNL, HUDCO, NHPC, and IRFC. These were all erstwhile favorites, and they are doing pretty well. We track 88 PSU stocks for you. Out of 88, 66 are in the green. So that itself is a very, very positive advance decline ratio. Within the railway space, a lot of activity in the private sector. This is Hind Rectifiers, 3.2% higher, 1427. Kernex, which makes anti-collision devices, 2% higher, 1375. Within the PSU railway pack, RVNL, RFC, and IRCT and IRCON are doing pretty well. Wagon makers Titagarh and Texrail are in the green, and there is a mild shade of green in stocks from the defense space as well. So these are Mazgaon Dock 1% higher, Midhani 0.8% higher, BEML, BDL, and of course Cochin Shipyard also in the green. So that is how progress is, ladies and gentlemen. And we also have a strong move coming in on Aditya Birla Asset Management Company and a couple of fertilizer stocks, in particular RCF, now getting back into the momentum space. Sakshi.
Absolutely. Mitesh, just wanted to also get a sense on this entire Adani Group space as well. Again, some momentum has been building up. The news flows that came in on Wilmar that fueled some more spark across the space. Adani Enterprises up today, Adani Green, Adani Energy Solutions. That's up. Even Adani Wilmar is now moving. On the news flow day, it was down, but today it's up by 4%. What is your own approach going to be on the Adani stocks for the new year?
Yeah, so let us break this question into two parts. First is how market react to this pack, and second is what is my technical opinion on this. First is pretty interesting, Sakshi, because every time the news will come about Adani, the stock hampers like anything, and in the subsequent days and the months and the weeks, stocks recover. So what market fairly has priced in is that any bad news is actually a buying opportunity in the Adani pack. Now, the day before yesterday also, the stock Adani Enterprise shoot up by 7.5% without any reason. So per se, what is the simple and the best way to approach this pack is whenever it goes down, with all the due respect to your risk profile, you can get into the counter by sticking to the specific stop losses. What is my view for the year 2025? The view is very clear that Adani Group will continue to shine technically. So we are of the view that at any decline going forward, one should buy both Adani Enterprise and Adani Port at decline with the respective stop losses. With a trailing stop loss, you can continue in the year 2025. Perhaps this is the one group or this is the one business house where there are strong possibilities of making very good money in the year 2025.
Okay, got that. Let me come to Arpit now. Amongst the big conglomerates, it was Reliance Industries, weakness that stood out. First time in 10 years, a negative return in 2024. Are things going to get better for Reliance? What is your approach going to be here?
So if you see overall the Reliance stock, we have seen very good returns in last couple of years. But however, if you see from last 2 to 3 years, overall if you see the index, the stock has been consolidated in a broader range and grossly underperformed the benchmark index. So if I look at the monthly chart of Reliance for last 3 years, it has been trading a broader range between 1100 to 1600, and in last 3 months you have seen a corrective move from 1600 to 1200 levels. Immediate basis, we see the weekly chart. It was holding well above 50 weekly EMA from last couple of weeks. Immediate basis, I think over the base of the stock is shifting lower, so the stock is likely to be in a range bound move in a broader range between 1150 to 1300 levels. And going forward, that's underperformance likely to continue because on the chart specific wise, till it holds below about below 1280 1300 levels, so the underperformance is likely to be there, and the stock is likely to be in a range of 1100 to 1300 levels on the immediate basis.
Got that.
9:48, ladies and gentlemen. The slippages now on the Nifty are increasing. We've broken below 23,600. So far, 23,570 for you. It's a 74-point downtick. The Bank Nifty is down 360, 350 points. There is an uptick on India VIX, and the daily pivot is broken as far as the Nifty is concerned. Let me just tell you some more interesting data. Okay, no, let's avoid this mention on a public platform, but it's not looking good. The next support is at 23,506. Let us see how that takes place. No stopping PSU companies. Chennai Petro and MRPL were in top form yesterday, and they are doing pretty well today. To you, Arpit, any view on CHPC? It bounced very sharply yesterday, and the rally continues up 4%.
So if you see over the chart setup of CHPC, the overall momentum was quite strong in this counter, and today also, in spite of market weakness, the stock is holding well. So I think generally is the sector specific that momentum is going out. On the immediate basis, 600, 605 is the major support level for the stock, and slowly, steadily we can now see up move towards 660, 670 levels. So over on the chart basis, the setup is still strong with major support near 605 levels.
Okay. Mitesh, I was asking Arpit on Reliance. I want to understand from you, what is your approach on Finance for the new year? Where do you see the stock heading?
So probably the stock will surprise in terms of consolidation. So I am of the view that in the first 2 quarters, Reliance Industries will not make much of a difference on the chart. Probably 5 to 7% range is what we are looking at. Perhaps in the second half, after spending 2 quarters in the consolidation zone, the stock might outperform in the second half of calendar year 2025. So technically, what we see is a broad consolidation with a maximum upside of 5 to 7% in the first 6 months.
Okay.
I think kudos to Arpit. CDSL is in top form, and this is the lone stock in the AMC space, in the wealth management space that is doing well. It's a nice swing trade in the offing. We've seen 7-8 days of selling. Yesterday was a bit of an uptick, and a strong move is now coming back to fourth. If CDSL is in action, you can't be missing out on BSE and Angel One. So these are the spaces that are doing pretty well. I have already marked Aditya Birla AMC, which is in top form today, 2.5% higher. So keep an eye out on this one. Mitesh, this has been your favorite hunting ground. I especially remember the wonderful call you gave on BSE about a year ago. Now, what is the view on this one as far as the overall sector is concerned, and what would be your top pick in the wealth management space?
So as far as BSE is concerned, we are of the view that the rally will continue going forward. So we have taken a pause recently. On the weekly chart, after hitting a high of 5837, the stock is correcting. But I am of the view that going forward, the stock will outperform. Within the entire space, I think Angel One likely to outperform going forward. So if you look at the chart pattern of Angel One compared to any other broking stock, the stock has very well corrected, then consolidated, and then make the next big up move. So from 3,896 on 12th of January 2024, the stock has corrected to the tune of 2,025 for the week ended 26th of July 2024, and then there is no looking back. So we are of the view that the recent consolidation is definitely an accumulation opportunity. One should go and accumulate the stock as of now. We are of the view that 3,500 to 3,800 kind of a very aggressive target is achievable in the year 2025. So Angel One is where one should bet on.
Okay. From the pharma pack, it's Strides that's jumping sharply higher. Let's look at the stock. I think it's now at the day's high point. Strides Pharma, it's at 11% uptick that we can see on Strides. Arpit, you did talk about Lupin as one of your top picks in the pharma pack. What about Strides? Do you think this should be tracked for momentum?
If we see overall pharma sector has been quite outperforming in trading a life high dairy, and within that if we see the chart setup of stride pharma also, it is quite strong. The stock is already up by 11%. So if you look at the monthly setup, it is the structure of higher highs high lows is intact. Weekly scale, it corrected towards 600 650 levels, but the stock again moved higher, and we have seen a gap up opening today itself. So trading a life high territories, the start setup is very strong. The base of the stock is shifted higher from 600 to 660, 670 levels. Now the major support is around 670, 680 zones, and definitely we can see a good upswing of towards 800, 850 levels. So chart wise, the setup is quite bullish, and definitely we can see a good 8 to 10% rally from here on, with major support around 670, 680 zones.
Okay, got that. Well, we will also
9:54, ladies and gentlemen. We are moving towards the last 5-7 minutes of trade, and giving company to CDSL is definitely BSE. We've discussed this, but strength coming back to this one. 3-4 days of strong move. Also, NAM India. So it's going to be a wealth management day. Okay, NAM India is doing pretty well. At the moment, you have a strong view coming into NAM India at 739, 1.7% higher. But the star of the day is Muthoot Finance. This is something, Mitesh, will require your intelligence for the long term. We have a record high today, and we have a strong move coming into Muthoot Finance. What are the medium term charts telling you about this largest gold financing company? Is this a move that will gain traction in 2025, or is this just a flash in the pan?
This move will give a lot of confidence to the people who are reading the medium term chart. The term which you have used right now here, Shailji, is very important. The medium term chart, it's looking pretty interesting. Give you the example. In the recent past, the stock has made a low at around 911 for the week ended 31st of March 2023, and then there is no looking back. So for the week ended 30th of September 2024, the stock has hit an all-time high at that point of time, 2078, and then pause and make a correction and made a low of 1756 for the month ended November 2024. And then there is a marathon run in the last month of the calendar year 2024. So finally, the stock has break out from 2078 and now trading well above it. So we are of the view that the rally has resumed. Stock is now entering into a new trading range. Over here, the new targets for the medium term will be set between 2500 to 2600.
Okay. So that's the view. We'll keep an eye out on that one. Arpit, coming to you now. Just wanted to get a sense on the new age tech space from you. We do know that Muthiah Oswal has had a positive view on Zomato for the new year as well. In fact, Zomato, Blinkit, Swiggy, they have all had a record, day as far as the New Year's Eve is concerned in terms of orders as well. That only goes on to show, how more and more people are betting big on quick commerce, and this space probably is just going to grow even bigger in size going forward from here. Tell us, how are you really looking at this space, particularly in the quick commerce basket?
If you see overall, the digital theme has played out wonderfully in the last year, and we have seen a decent uptick in the entire digital space stocks. So I think better would be to play to with the view of 6 to 9 months view, and we can play out to 2 to 3 stocks within this space. So if we see the space with Zomato itself. So if we see the chart setup wise, it is a strong uptrend. On the monthly scale, it is given a range breakout above 275 to 80 levels. However, from last few days, the stock is consolidating, but the base of the stock has shifted higher. So Zomato would be a first pick within this space that is we are quite bullish upon, and definitely going forward we can head towards 300, 330, and 350 levels. Second would be Paytm. So if you see Paytm post its listing, we have seen a very good rally in last 6 months, and the stock has moved from 400 to almost 1000 levels. So on the monthly setup, it has given a range breakout of about 950, 960 levels, and definitely 20 to 30% rally can be seen here on towards 1200, 1300 levels. So this would be a second pick within this space. Along with that, one more space stock that is looking good is from the insurance space and the Policy Bazaar. So if you see the setup as a Policy Bazaar on the monthly scale, it's a strong uptrend, range breakout above 2000 levels, weekly also pole and flag breakout, and trading lets life high territories. Stocks would be a preferred pick within this space that one can go for in this coming year, and definitely we are going to win these stocks as compared to the index and the broader market returns.
Okay. For those who have an ear to the ground, ladies and gentlemen, the drumbeats of traders coming back into action are right there. Old favorites are back. We mark BSC and CDSL. The entire public sector railway space is buzzing. IRCON, IRFC, please keep an eye out on that. Look at how stocks from the erstwhile fertilizer space are doing well. Keep an eye out on FACT in particular and RCF. These two are buzzing. And then of course you have old-time favorites, Midhani coming into action. Look at how IRFC is moving. Pharma is in good shape. And of course you have a strong move coming into the newly listed counter, Unimec, 5% higher now, 1438. Sakshi, yours.
All right, we'll wrap up the trade now. Many thanks, Pradesh and Arpit, for being with us in the morning edition and the first day of 2025. Yet again, wishing you both a fantastic upcoming 2025, and may it fulfill all your dreams, desires this year. And may you continue to come more often on our channel, Business Today Television, to guide our viewers on their investment journey in this year as well. Fabulous start. I think we won't have any more complaints, but stock-specific action continues, even though the sentiment is dampening on the benchmarks now. 0.25% of a loss on the Nifty, 0.5% of a loss for the Nifty Bank. So that's where the pressure is building up. But let's see how it unfolds going forward from here. Throughout the course of the day, viewers, we will continue to get you market masters' voices, kind of insights that you need for the 2025 investment plans that you need to make for yourself. So stay tuned. There's a lot more coming up on your screen. Till then, thank you so much for joining in.
भारत 10 साल में दुनिया की 10वीं से 5वीं बड़ी इकोनॉमी बन गया।
It was a year when India maintained its status as the world's fastest growing major economy. With forex reserves at a healthy